Good afternoon, everybody. My name is Cary Loyd. I'm the broker and co-owner of Blue Collar Realty here in Harrisburg, Pennsylvania. Time now is 2 o'clock on Monday, April 20th, 2020, and I'm here with Michael Brighbill of the Mortgage Company to talk about changes in the real estate industry and the mortgage industries, which will enable you to be an informed consumer in the market that we find ourselves in today. Now, as many of you know, we've always had digital signing as it related to real estate contracts, and that hasn't changed. What has changed is the way we show houses and the way the process goes from that point on. As you know, we have currently a stay-at-home order from our governor, and so that has mandated some slight changes. We've created some addendums through the Pennsylvania Association of Realtors to protect your interest. And in the near future, home inspections will continue to happen, and more agents are becoming proficient using digital platforms such as Zoom, which enable virtual showing so that you can see the home virtually and be able to write a contract based on what you see, and then be able to see the property in person at the time of the inspection. So I'd like to introduce Michael Brighbill of the Mortgage Company. Mike, talk to us a little bit about yourself and about your mortgage company.
Hey, yeah, thanks, Kay. My name is Michael Brighbill. I work out of Camp Hill in Harrisburg. And work for the Mortgage Company, which is a division of Annie Mac Home Mortgage, and our headquarters for the Mortgage Company is in Allentown, Pennsylvania. So we provide mortgage solutions for homeowners, home buyers, whether you're a first-time home buyer, investment property purchaser, or you're looking to refinance your existing mortgage. We can help you with that.
Well, Mike, the big question on everybody's mind today is, can I still obtain a mortgage and buy a home?
Yes, you can. Absolutely. Yes, you can. Now, there's some things that have changed, as you mentioned, and I think we're going to, get that figured out here today on this call. But, guidelines have tightened just a little bit. So you still are able to buy. The scenarios have changed. It's all about your mortgage picture. Every picture is different. So some mortgages can take a little bit longer than others right now. It just depends on how complex the scenario is, but you are still able to buy. There's certain hurdles that we have to get over when it comes to appraisals and showings and things like that. But yes, you can still obtain a mortgage.
Yeah, I had someone email me a question. It said, what hope is there for first-time home buyers going forward?
Oh, okay. Well, first-time home buyers, you still have a variety of options available to you. There's down payment and closing cost assistance available from some of the counties. There's income limits that apply, so we have to kind of determine if you're going to fit into that appropriate category. And then you also have the Pennsylvania Housing Finance Agency has a first-time home buyer program, and that applies to anyone that hasn't owned a home in at least 3 years. So you may have owned a home before, and you can qualify for the first-time home buyer program now. It generally has a lower interest rate, some reduced fees, so it's a great option for buyers. Now, a lot of times it does have the lowest interest rate. Sometimes it doesn't. So ultimately, you might be a first-time home buyer, and the first-time home buyer program could be great for you, but there might be another program out there that's even better.
Excellent. Now, how long do you expect most loans to take from contract to close now? I know in the past we've closed loans in 3 to 4 weeks, but what would be realistic expectations now?
So again, it's all about that mortgage picture. Everyone's mortgage is different in some way, shape, or form. And that's because you have different credit history, you have different credit reports, you have different assets, you have different income and employment. The houses are all different, the locations are different. So a lot of that comes into play. If you have a very clean purchase, you're putting 20% down and you don't have a lot of debt that you have to explain, you haven't moved a lot of money or assets around in your accounts, there's less documentation that's needed to be gathered, I think we can still do a 30-day closing. But, it's all about the agents, the clients, and everyone working together, promptly and efficiently to make sure we get done at that time. But yeah, if it's a more complex scenario, it's good to have about 6 weeks to make sure that we can get everything done. And again, it's like we have some hurdles with, appraisers. Appraisers right now, they're not really allowed to go out and do their job, just like, some agents are not allowed to do showings. So appraisers are allowed to do what's called a desktop appraisal. So they're going to determine the value of your home that you're purchasing based off of research off the internet and comparison sales in the neighborhood that have similarities with that house. Or they can do what's called an exterior only inspection, which right now I'm not sure if that's allowed with the order of Governor Wolf either. So, the appraisers are kind of facing that challenge. The only type of mortgage that we can't have an appraisal done right now in Pennsylvania is a cash out refinance. A cash out refinance requires that the appraiser goes in the home. So right now we're trying to get that figured out, but hopefully, this ban will get lifted here soon.
Okay. I've been around a long time, so I remember in 2008, banks abruptly and in a knee-jerk reaction, seemingly overnight, raised credit scores and down payments. Are you seeing any of that reaction from the 2008 crisis?
I mean, they're definitely they're tightening up guidelines to avoid risk. Lending is all about risk. Are we going to, we're going to give you this money? Are you going to give it back over these installments? And, are we going to be able to collect that interest? Or is the investor going to be able to collect that interest? So when you're looking at a credit scenario or a credit profile, it's all about their payment history. What have they made their payments on time? For buyers that have had some blips in their credit in the recent past, they're going to have a little bit more trouble getting a mortgage, okay, because their credit score is going to be a little bit lower. We haven't really changed our credit score requirements, but if you are at a lower tier, you might have to provide or meet additional criteria. For instance, if you're below a 620 credit score and we still get the approval through our underwriting system, you might have to have 6 months of reserves in your accounts after you close, which means you have the money to pay your mortgage for 6 months after you close without putting any additional money in there. And again, it's adding a little buffer there, so it's less risky for that buyer to miss their mortgage payment. Does that make sense? So the credit scores really haven't changed too much, but the criteria for the lower credit scores, there's just some additional stuff that we have to verify and make sure that we're lending responsibly. We want to make sure that you can make your payments comfortably for the foreseeable future, so that way you keep your house and you pay the investor back.
Sounds good. And now I know rates will change in about an hour and a half, but just give us a snapshot of what the FHA, conventional, USDA, and PHFA rates are running as we're talking right now.
Okay, so rates right now are heavily dependent on credit scores. Okay, so if you do have a lower credit score, you're going to see a higher interest rate. And again, that's all due to risk. The more risk involved for the lender and the investor, the more they're going to have to kind of recoup. So they're going to charge higher interest in those situations. Now, with that being said, there are some programs like the PHFA first-time homebuyer program that has one interest rate no matter what your credit score is. As long as you're at the minimum credit score of 620 or higher, they have one interest rate for that program. And generally, it's pretty favorable. PHFA also has some other programs right now, FHA, VA, USDA, that have great rates. I really can't quote rates without having a specific credit profile, but they're anywhere from the mid to low 3s up into the 4s, again, depending on your scenario and your credit scores. Government loans are a little bit more attractive right now. Our company, the mortgage company, has actually developed some portfolio mortgages. So we work with a variety of investors, and what we can do is we will close the loan, we'll originate the loan, underwrite it, and close it with you, and then we'll sell it to the investor. And that's where we make our money as a correspondent lender. We do all the work up front, and then they make the money on the interest in the long run. In the interim right now with the coronavirus, we've developed our own portfolio loans where we'll actually maintain the loan after closing. So we would be the servicer, and we are able to develop and provide some lower rates. So, again, if it depends on the client. So the problem is with quoting rates now, you may or may not be eligible for that. So I kind of want to avoid those numbers a little bit too much.
Oh, I totally understand that. But what you are saying is this is still one of the best times in the history of mortgage financing to buy a house.
Yeah, historically the rates are very low. I mean, even compared to 5 years ago. Yep.
Now, a lot of first-time home buyers take advantage of down payment or closing cost assistance programs, and a number of our local counties, especially York, Cumberland, and Dauphin County, among others, have been offering these grant programs of up to $3,000 to $4,000, which can be forgivable under certain circumstances. Are those opportunities still available for buyers right now?
Well, the challenge presented there is they have to complete a counseling class in order to obtain that assistance, first of all. So if they're not operating in counseling, then you're not going to be able to obtain that. Once you complete the counseling, they give you a certificate. It's good for 1 or 2 years, depending on the program, sometimes longer. But yeah, without being able to get that counseling completed, you're not really able to be able to start that process. So again, hopefully we get opened up here, and then folks can get back to that counseling. But yeah, I mean, it's important to note that they're not necessarily grants. They could be a second mortgage. Sometimes they have to be paid back. Most of them have 0% interest. Some of them are forgivable, but it's going to depend on the county. It's going to depend on the borrower scenario, what's available to them. So that's kind of where you need a lender to decipher that for you. There's also income limits for that program as well.
Oh, excellent. Okay. And now, are there any types of mortgages that are not being made right now?
Yeah, good question. So a lot of the alternative credit, or also known as alt QM mortgages, are no longer being funded. And those are for folks that had recent missed payments on their credit report, like within the past 12 months. Normally you can't get a mortgage unless you've had on-time payments for at least 12 months. There was a couple programs through a variety of investors that would allow for those to be on the credit report, and they would still provide financing. Or if you had a history of bankruptcy or foreclosure that was just within the past few years, they have this alternative credit program. Now these programs had higher interest rates, but to some buyers it's worth that higher interest rate to own a home. It means that much to them that they're going to pay a little bit more. So those programs were available to them. They're no longer available. And again, it comes down to risk. They were too risky. These types of folks had recent credit issues, and it's just too risky to lend to somebody that already has not been able to make payments on maybe an auto loan, a student loan, medical bills, credit card, anything.
Okay. That makes sense, given the current situation. But now, how long can people lock their rate for feasibly?
So, with our AnyMac portfolio loans, we can lock for 30 days to get the most favorable rate. Some PHFA, we can lock for up to 90 days. Generally, the longer of the term that you lock for, you get a slight little bump in interest rate. But at least then you're locked for that specific term, so you are guaranteed that rate as long as the loan closes.
Okay. Now, instead of the higher rate, is there a point formula to have a longer rate lock versus a bump in the rate?
You mean as far as to pay for it, to pay for the longer rate lock?
Correct. Yes.
So yeah, essentially that's what it is. If we're locking for longer term, and you want that same rate at the shorter lock, there could be a potential where you pay discount points to keep that same rate. But yeah,
okay.
What I do is I avoid my clients paying too much in discount points unless it makes sense for them to do so.
All right. Good. And now, if you're getting towards the end, and for some reason something happens the day of settlement, which would also coincide with your rate lock expiring, what remedy would you have at that point to still conduct settlement? Can you have a paid extension, or how would you handle that situation, Mike?
Yeah, you can extend, in most cases, I should say, that you can extend the rate locks, a day, 2 days, you can do it for 30 days. And each extension is going to have a cost, because you're essentially having that rate for longer than what you initially locked it at that particular price. So if something happens with the property and the seller didn't come through with necessary repairs in time, then the seller could potentially pay for that lock extension request. If it's something from the buyer, when you're getting a mortgage, you got to provide a lot of documentation to the lender. And then that documentation that you provide to the lender could indicate more documentation that needs to be provided. So if the clients are unable to provide the documentation quick enough, then sometimes they would have to pay for the rate extension if we're unable to close on time.
Okay. Well, thank you very much, Mike. I think we've touched on a number of questions that I've been getting asked lately, and I wanted to be able to, bring as much information to public view as possible. And I appreciate you taking the time to be with me today. And folks, as any changes happen in the market, Mike and I are going to get together, and we're going to bring those changes to you in this format, so that no matter where you are in the purchase transaction, whether you're in the pre-approval process or you're in the or you're under contract, no matter where you are, we want you to have a successful transaction. So thanks for joining us, Mike, and I'll see you next time.